What does it mean if silver has become a strategic mineral? It basically means that the USA has to stockpile it for emergencies. So they're not going to be buying tomorrow. At the moment, the report is just a draft report, and there's another 30 days of consultation on it. So that consultation period expires on the 25th of September, and assuming there's no change in the decision, then still silver will be a strategic metal, and the USA will have to start stockpiling it. How much would they stockpile? Well, we don't know that, but we can say that at one point they held 5.9 billion ounces of silver, and I see in 1958 they had 2.1 billion ounces of silver. To put that in perspective, that's well over 2 years mined supply.
Silver is back in the spotlight, surging to levels we haven't seen in almost 12 years. And with that, the conversation about its role in the global economy has exploded. But here's the twist. Silver is no longer just the other precious metal. It's becoming both a lifeline for investors and a critical engine of industry. From powering solar panels and electric cars to running advanced electronics, demand for silver is accelerating faster than supply can catch up. Investors are also waking up. With debt piling higher and trust in paper money fading, more people are moving into physical metals. And as Clive Thompson points out, this isn't just another short-term cycle. This is a structural shift. Years of underinvestment in mining and refining have left production struggling, while consumption keeps climbing. Silver now stands at the crossroads of two unstoppable forces: its monetary value as a safe haven and its industrial value as the backbone of modern technology. Those who still see it as gold's little brother are missing the bigger picture. Silver is writing its own story. And because industry depends on it, silver's demand doesn't vanish even when investor interest cools. The future price of silver is being pulled by massive global trends: the green energy transition, rapid tech innovation, and a world losing faith in fiat currency. History tells us that when silver enters this kind of setup, tight supply, rising demand, prices don't just drift higher. They spike, violently and without warning. Analysts are already whispering about whether silver could smash past old highs and reach levels once thought impossible. If that happens, silver won't just be a sidekick to gold. It'll be a cornerstone of both wealth protection and industrial progress. Now, before we jump into Clive Thompson's interview, make sure you hit subscribe and turn on the bell icon so you don't miss the updates. Let's get started.
Look at the prospects for the silver price. You can go to the Silver Institute and see the historical supply and demand table. And if you look at the top, you'll see that the mine production has been falling annually since 2016. Well, the production will be up 2% this year, but in 2016, production or mine production was 900 million ounces, and now in this year it's forecast to be 835 million ounces, a drop of 65 million ounces. The reason that the production is not increasing despite the higher silver price is that a lot of the silver mined in the world is mined as a byproduct of another metal, such as gold or such as copper. So the demand for silver doesn't, whilst the supply of silver doesn't really change because it depends on how much is brought out of the ground as a byproduct of the other metal. Although we've got falling supply, we have rising demand. Demand over the last decade has risen from 993 million ounces to 1,148 million ounces. That's a rise of about 150 something million ounces. So whilst supply has gone down by 65 million ounces, demand has gone up by about 150 million ounces. So we passed the point of supply being less than demand a couple of years ago, in 2021, 2022, and the gap is just growing bigger. Now, according to the Silver Institute, part of the demand comes from the purchase of silver coins and bars for investment purposes. They reckon that 200 million ounces will go in that direction this year. Just to put that in perspective, that's about 1 ounce coin, 1 ounce of silver, for every 45 people. So do you have your fair share? Probably, if you're watching this, you have more than your fair share, because I expect you've bought more than 1 ounce. Another reason why the silver price is likely to push higher is the announcement by the Department of the Interior, the DOI, that they have entered silver into the draft list of critical minerals for the first time ever. So why is silver on the list? It's because it's a strategic metal and very much needed by the American electronics and defense industries. And if there was a disruption in supply, let's say from Mexico, which is the biggest supplier of silver to the United States, it would have an impact on the GDP of the United States, even if a disruption in supply is low. They say there's a 4% probability of a disruption in supply from Mexico. What does that mean? It could mean that there's civil unrest in Mexico. It could mean that Mexico decides to have some sort of retaliation against the United States for tariff reasons or some other thing. Or there could be some other event which makes the transportation of silver from the mines to the American border complicated or difficult. So what does it mean if silver has become a strategic mineral? It basically means that the USA has to stockpile it for emergencies. So they're not going to be buying tomorrow. At the moment, the report is just a draft report, and there's another 30 days of consultation on it. So that consultation period expires on the 25th of September, and assuming there's no change in the decision, then still silver will be a strategic metal, and the USA will have to start stockpiling it. How much would they stockpile? Well, we don't know that, but we can say that at one point they held 5.9 billion ounces of silver, and I see in 1958 they had 2.1 billion ounces of silver. To put that in perspective, that's well over 2 years mined supply. So they couldn't even buy a tiny fraction of what they used to hold, because in fact all of the silver coming out of the mines is used by the electronics industry. So if they didn't make any attempt to buy any silver, it would certainly push the price up a lot. But we don't know if or when they're going to start doing that, but I think they will have to once silver enters onto the list officially on the 25th of September probably. Now, just remember, none of the stocks that I talk about today are recommendations. This is not meant to be a recommendation for anybody. I'm not your financial advisor. I know nothing about you. I don't know about your family, your age, your job, your income, or your other assets. I don't know your personal risk tolerance, so I can't advise you, and do not take anything in this video as investment advice. But what you can do is look at the shares I'm talking about and go and discuss them with your financial advisor, or if you're capable of doing it, do your own research. And I'm going to talk a little bit about how I did my research, so if you want to do the same thing on your own, you'll be able to do so. But no obligation, because I'm doing the work for you, and I'll be naming the stocks as well. So let's start by looking at the list of companies in detail. There are 38 companies I chose to put on the list for further examination. And they range in size from the very large, 44 billion US dollars, that is large, at least for the mining sector it's large, all the way down to $50 million. That's tiny for any sector.
Silver may have struggled to stay above $40 an ounce, but according to Clive Thompson, the story is far from over. He believes the metal's momentum is simply too powerful to ignore, and could soon push prices back toward their 2011 record highs. What makes silver so different is its dual identity. It's both a critical industrial material and a safe haven in uncertain times. On one side, the global green energy boom is driving record demand, especially from the solar sector. On the other, inflation, geopolitical turmoil, and fading trust in paper assets are pushing investors to stockpile silver like never before. Thompson argues these two forces are colliding at the exact moment supply can't keep up, the perfect setup for a potential price explosion. And it's not just the fundamentals at play. Market psychology is shifting. Investors who once ignored silver are now waking up to its real value, especially as it has started outperforming gold in recent months. He also highlights the gold-to-silver ratio, which remains historically high. If that ratio normalizes, silver could not just climb to $50, but surge far beyond. To Thompson, this isn't just a short-term rally. It's a structural revaluation of silver, a recognition that it's both a driver of future technologies and a financial anchor in an increasingly unstable world.
Looking for companies which have a very good prospect of increasing their gold production and that have got also I'm looking for companies which got lots of gold left in the ground. So I'm looking at the reserves, and I want to know how much they sell it for each year. Now they can't tell me how much they're going to sell it for next year because they'd be telling me what the gold price is. But if they can tell me what they sold it for last year, it gives me a sort of clue whether they were in the range of what the gold price is, and they gold and silver price. They all were, so that's wasn't really a big problem, but it was just useful to know. And I can assume that they will all sell it at the prevailing gold and silver prices in the future. So I also wanted to know for each company what their estimates were for production in the coming years of each metal. Now that information was a little bit harder than I thought to get. It seems very simple, but at the end of the day, a lot of the companies weren't specific about how much of their output was gold and silver. They kind of gave it as a consolidated thing. They called it gold equivalent ounces, or GEO, gold equivalent ounces. So basically, for every, let's say, 100 ounces of silver, they counted as if it was 1 ounce of gold. Or for every ounce of gold, they counted as if it was 100 ounces of silver. So I had to break that down, and that was a little bit difficult. And then, of course, they've got, for that figure, the all-in sustaining cost, which is partly the cost of the gold getting out of the ground, partly the cost of getting the silver out of the ground. So again, it was a little bit complicated to break that down. Lots of companies weren't very forward with the forward projections. They didn't say how much gold or silver they're going to get out in 2026, 27, which is what I want to know. Usually they told me for the previous year, and usually for the current year what they expected, or at least if they didn't, I could extrapolate that by looking at the last 6 months results and find out how much they dug out in the first 6 months this year, and extrapolate that to see how much they might dig out in the whole year. So I had to make a few educated estimates as to how much silver or gold might be dug out by some companies, especially when it came to estimating the amounts in 2026 and 2027, because almost no company would give me, well, I won't say no, there were some, almost no company gave me the answers to that. So looking at the spreadsheet, and you can see when you look at this is a pretty big spreadsheet. There's thousands and thousands of calculations I've done to arrive at the conclusion. But let me just tell you, broadly speaking, how I arrived at the conclusion. For each company, I took the selling price of gold or silver, what I estimate the future price will be. So I'm going to work on 2027, and I'm going to assume that in 2027 the gold price is $5,000, and I'm going to assume that the silver price is $50. I think those numbers are both very achievable. I expect we'll probably go past them, no guarantee here, but I thought that for more than about 2 years away, or if you go to the end of the year, 2.5 years away, it's not unreasonable to get to those levels. So I took those prices, $50 and $5,000 as the price of gold and silver, subtracted from it the estimated all-in sustaining cost of each metal, adjusted for inflation, which I assumed was 10% in each case per year, and that would give me the gross profit per ounce of gold or gross profit per ounce of silver. I then multiplied the result by the number of ounces of gold or the number of ounces of silver that they produced, and that gave me the overall gross profit of the company. I then had to deduct the other expenses like taxation, like prospecting, like marketing, and the other expenses which weren't related to digging it out of the ground to see their net profit. Having got the net profit, I could divide that number by the number of shares in issue to give me the earnings per share of each company. Now I have to extrapolate from that. Now we've got the earnings per share in 2027 as an estimate. I have to extrapolate from that what will the gold price be. So I took a very low price earnings ratio multiple of just 10 times, and don't forget most companies on Wall Street are much higher multiples than that, but I took just 10, and I multiplied that profit by 10. So whatever the earnings per share was, I multiplied it by 10 to get to the share price. So now I've now got for each company a share price in 2027, at least a potential share price. Now I had to do a lot of maths to allow for lots of possibility around that, so the share price might be a lot higher than I calculated or a lot lower than I calculated. I think I calculated somewhat conservatively because I don't want to be seen to be too rash in my predictions. I don't want to be seen as rash at all. I just want to be realistic here. So I've now got for each company based on those parameters, that $50 gold and $50 silver and $5,000 gold in 2027, I've got a potential share price for each company. And I can compare that with the current share price and work out what your profit would be on each individual company. And the higher the profit, the more risky the company probably is. And there are many variables in doing these calculations, which means that the figures might turn out very differently from what I calculated. But as I said, I've tried to be conservative and probably nearer the bottom end of the range than the top end of the range, at least in the bottom, let's say the bottom 40% of the possibilities. Of course, I can put in some outrageous numbers to see how far I could push the potential profit. So, for example, if I change the silver and gold price to higher numbers, I could get much higher prices.
Silver's outlook is heating up fast, as industrial innovation and financial uncertainty collide to create one of the most compelling setups the market has seen in years. This metal isn't just another commodity, it's a cornerstone of clean energy technologies, from solar panels and electric vehicles to advanced electronics, while also holding its timeless role as a safe haven against inflation and currency instability. That rare dual demand is something few other assets can match. But here's the catch. Miners are facing serious structural challenges. Ore grades are declining, production costs are climbing, and the industry simply can't ramp up supply fast enough. That means any surge in investor demand, or even just steady industrial demand, could light a fire under silver prices, forcing a sharp revaluation almost overnight. At the same time, mining companies themselves could see their profitability and market valuations soar. This is why the entire silver sector may be on the edge of a breakout, one that could completely redefine how silver is viewed in the global financial system. So now the question is, where do you see silver and gold prices heading in the near term? Drop your thoughts in the comments below. And if you found this breakdown useful, don't forget to like, subscribe, and hit the bell icon so you never miss our updates. Thanks for watching, and I'll see you in the next video.